Gold attempting to break all-time highs. NVDA providing the market a boost. Going to break down all the charts. This is Matt and Mark Justice, Tackle Today from Tackle Trading, breaking down all the charts, the news stories, so you can have a concise manner to gather all your information. Matt, a lot of interesting places to start. I want to start with gold, but we'll start with the broad markets to maintain a sense of order here on Tackle Today. Really, really strong intraday price action yesterday. One of the larger hammer candles I've seen in a while. Markets attempting to establish after that move. One of the more boring opens we've seen in a while, which isn't necessarily a bad thing. What are you seeing on the technical charts right now?
Well, what we're seeing is the number one reason why we did not downgrade the S&P 500 despite the volatility last week. And when everybody in the world was screaming for the end of the world, we were talking about support at 540 and holding at that 540 level and treating this like a bullish retracement instead of some volatility type moment. And yesterday was an interesting day. Obviously, 3 out of the last 4 days, we've seen negative cash opens, but we've also seen that get recovered in those days as well. And yesterday we saw that very same thing. And so we've been dealing with a little bit of V-shaped bouts of volatility over the course of the last 3-4 trading sessions. And yesterday was, quite frankly, just one of the bigger ones. It was quite aggressive from the bull side of the equation, but you've seen that since last Friday. Big down, little V-shape over the weekend. Big down, V-shape. Big down, V-shape, big down. Once it started V-shaping 3 out of the last 4 days, I mean, it just kind of took hold. And quite frankly, on the CPI front, I kind of felt it was silly with the market throwing a temper tantrum on the CPI report yesterday when it really didn't, change the conversation in any real capacity. And then you had the PPI report come out today, and you had a little bit of that volatility as well, but not nearly as much. And so we had another negative cash open, but it only lasted very, very short. It just came in V-shape right back up into resistance. And so you're seeing a couple things. Number one, you got back up above resistance yesterday. You held 540 for a second time in a row. Once again, Mark, you look at that clean pivot of 540 and tell me technical analysis does not matter to the market. It matters chiefly important to the marketplace. And so you do see this as an improving condition. You do see it as improving, not only because 540 held, not only because the pattern kind of broke yesterday, but because you got back up above the 50-period moving average. That is a really important short-term moving average that really kind of, traders will see it as, if it's above it, you see it as an overall bullish situation. If it's below it, you see it overall as a neutral situation. And so it is a good step to get back up above the 50. You got back up above the 9, and getting back up above the 9 was really important as well, because now the 9 is going to act as a little bit of the support level. That was a really, really good candle yesterday, kind of bucked out the volatility. And quite frankly, it's another day that reminds me that it's tough to be a bear.
Yeah. Not every day that ends in Y is a tough day to be a bear, but a lot of them are. A lot of them are. And Matt, we're going to have, will you give me just the cues real quick before we transition to the economic reports? We're going to talk about some news from NVIDIA. Do you have any specific look on the cues here, which is an area that I'm really, really interested in right now?
Yeah, a lot of chatter at Tackle on the cues right now. We are seeing for the first time yesterday, we saw a relative outperformance for the first time in a while. Today, you're kind of hanging in there. It's a little bit of a doji day here in the market, kind of thinking about yesterday being like 2 candles, right? It's a little bit of a doji candle, but think about what we talked about with the spiders getting back up above that 50-period moving average. Well, that's kind of where you're at right this very second. You're staring down the barrel at that 50-period, that 20-period compo moving average right around 470. And then secondarily, the technical pattern that I'm really tracking here is what's known as the symmetrical triangle. And when you look at a symmetrical triangle, you connect the top levels of resistance, the bottom levels of support, and it kind of shows you the range of where this is trading between. And as you can see, the ranges are getting a little bit more smaller in the symmetrical triangle because the volatility is starting to slow down. We're not seeing as big of drops in price, for example, and thus you're seeing an increase in support, you're seeing a decrease in resistance. Symmetrical triangles typically take on a probability edge to the longer duration trend. Now on my screen here, you only see a short-term uptrend and a longer-term downtrend, but I'm not showing you the entire data. When you look at the entire data, yeah, you had a longer-term uptrend here if I connected other resistance levels, but the simple reality is you do see this as an edge to the bull side. You do have overhead, so it becomes a little bit of a volatility type situation, but that's an improving condition against the volatility that we have been seeing in the Nasdaq really ever since kind of mid July here. So it's been a couple rough months in the Nasdaq. You're finally starting to see relative outperformance. We're not there yet, obviously. We're still choppy. We're not clean. Symmetrical triangles are not a clean pattern, but at the end of the day, this is an improving condition. And you specifically talked about NVIDIA. NVIDIA quietly in the last 3 days is outperforming everything.
Yeah, no, absolutely. We'll talk about NVIDIA here more in a minute. Next week, the Fed meets. We're going to talk about this quite a bit in the Tackle Trading newsletter that we will release tomorrow night. We'll talk about it on the Trading Justice podcast the coming week. And we're getting our last batches of data for the Fed to work with coming in today. PPI, we had the CPI report yesterday. PPI kind of had that CPI vibe, generally in line with expectations, but upticking on inflation a little bit. Both the headline and the core PPI numbers, slight uptick, right? Nothing to scare the children, but one of those data points that for the future, right? Yeah. If you continue to see that type of data in the future, all of a sudden we're having a little bit of a conversation. So slight uptick in PPI, and then jobless claims came in this morning. And this thing loves to hover at 230,000.
I'm going to put the over under for next week at 230,000.
Like it loves to hover at 230,000. Like
you got like just 230, 231.
It's insane. It's just every week. It's almost becoming a non-event because it just comes in. Anything you took out of the economic data today?
And the only thing I really took out of the PPI report here today is, the CPI report was a slight miss yesterday. You basically came in at 0.3, and it was really on the core side of the equation with some concern on inflation, on the inflationary side with insurance and shelter, but it was really kind of a specific part of we were concerned about shelter, but not in general CPI as it came down from 2.9% year over year down to 2.5%, which was a very good reprieve. But you still would see that as a slight concerning data point on the core side of the equation. PPI report came in slightly above the expectation here today, and the market really didn't care about it. The market threw a temper tantrum on the algorithm response to the CPI report tomorrow, but that stopped when it got into that 540 double bottom scenario. PPI report sold off initially, but recovered fairly quickly. The market's not showing you it's caring very much about inflation right now. And the simple reality is because the Fed has declared victory on inflation, the long-term trajectories do equate down to 2% by the end of 2025 going into 26. And so remember, this inflationary conversation is an extremely lagging conversation. And so with the Fed going into a rate cutting cycle, the inflationary side of the equation is not as important to the central bank as they're more focused on the labor side, as they're more focused on the specific economic side of the equation. And I say that because if these two reports were to come in last year, I'm not talking about the year over year numbers. I'm talking about the month over month numbers with the slight misses. They would have been sold aggressively.
Oh, very aggressively.
They would have been sold aggressively. But this is what I've been saying recently, that the inflationary situation is important to us as consumers. It's important to us as members of our society, but it's not a specific discussion at the central bank who's going into a rate cutting cycle, which they would never go into a rate cutting cycle if they were not confident that the inflationary trajectory was going to get down to that 2%. Now, whether that does or doesn't, we're going to have to, traverse that road. But that's where the central bank is at. And when the central bank is there, we're not having an inflationary conversation because the central bank said we're not that concerned about the inflationary side, or they would never, and I mean never, leave the pause, and they would never embrace a cutting cycle if there was not some confidence on the inflationary side with a little bit of concern on the economic side.
Yeah, no, and we're going to continue to have these conversations in all of our tackle trading products. Stocks in the news, couple earnings reports. NVDA sparked the market yesterday. Matt, what do you got for us?
Yeah, it honestly kind of a boring stocks in the news week. It's a little bit of an economic week, a little bit of a volatility week, seeing if we can clean that up from a technical perspective. Not the biggest names in the market that has major news this week. That does start changing as we start getting into next week. But for today, we got Kroger, Alaska, and we got NVIDIA here. Kroger on an earnings front, they came in with a beat against EPS. They came in with a slight miss on revenue side of the equation. And then they basically reaffirmed full year 2025 guidance. And so that's kind of where Kroger is. It's a walk in the park type of report. Shouldn't really concern from the fundamental side of the equation. When you're looking at the Alaska Air Group news here today, shares did gap up 5%, but they started selling off with the cash open a little bit. But this is a guidance update out of Alaska. Remember, this is not an earnings report. This is just a guidance update. Alaska provides Q3 guidance, which was significantly higher than what they were expecting. And when you do look at the CPI report yesterday, there was about 5 months in a row of dropping price from air travel perspective. Last month was the first month we saw a bump up in price from an air travel perspective. And from that report till today, Alaska Air Group did release that EPS guidance. I'm not sure they're tied together, but it was kind of 1-2 here. CPI showed that there was a little bit of concern on the bump up in prices on air travel. Alaska Air Group comes out today, raises EPS guidance. And then on NVIDIA here, not really any specific news, but over the last few days, NVIDIA has quietly started outperforming the semiconductors. They've quietly outperformed the Qs, and they've quietly outperformed the S&P. And why that's important is because they haven't been doing that, and NVIDIA was the market for a good year and a half. And so that's a good sign if you're a bull in the market with NVIDIA starting to lead a little bit. We'll see if they can continue to do that. But I love this quote out of Jensen here today. We have a lot of people on our shoulders and everybody is counting on us. He understands what NVIDIA means to the market. He's a serious individual taking on some serious challenges. And quite frankly, I just felt that quote was spot on. The entire market is always focused on NVIDIA, and basically 82%, they control about 82% of the entire AI conversation right now. And so a spot on quote coming out of Jensen here. Now, from a technical perspective, I always kind of like to look at the stocks in the news very quickly just to see if there's any edges out there, put things on radars and whatnot. You got that gap up, and then it kind of sold off, really hovering against that 200-day moving average is Alaska Air Group. You're looking at Jets, which is the ETF that tracks all the airlines. Got a little bit of a situation developing right around that 1920 level where you have an old resistance level, a little bit of a reversal, trying to get back up above the 200-day moving average. That's certainly interesting when you're looking at the Jets ETF. And then a little bit of a volatility pattern above the 200-day moving average on Alaska itself. When you're looking at Kroger, obviously they had a pretty good earnings result, made the investors happy, no doubt about that. You got a lot of chop here. Kroger's not necessarily a great trader stock, more on the cash flow investor side of the equation, and they certainly made those types of investors and traders happy with the results here today. And then on NVIDIA, you're seeing a relative outperformance here. You're starting to get back up above those short-term moving averages. You're really still in the middle of some ranges because there were some wide volatility ranges here. You're talking about a stock that has some degree of short-term downtrend, uptrend, and neutrality from 140 all the way down to 90. That's a big range for a very important stock. And so I'd certainly allow it to develop from a directional perspective, but an improving condition nonetheless. And when you are looking at that improving condition, you look at the last week here, Mark, little bit of dojis everywhere in the market when you look at the last week, when you talk about the market itself. But here's NVIDIA, quietly up 11% in the last week. When you look at the last day performance, here's NVIDIA showing a little bit of upward movement price where the market's kind of hesitating and stalling at a little bit of resistance. And so, yeah, it's a positive step for the market when NVIDIA starts taking charge.
Yeah, absolutely. Listen, gold's taking charge right now. A much anticipated breakout that literally telegraphed itself for 3 straight weeks. Gold, from a fundamental perspective, we make our case, I don't know, for years now. We like to say it's any day that ends in Y is a good time to start a gold position from a long-term investing perspective. And now we have a technical story to go along with the fundamental story. It's good luck for gold, isn't it?
Yeah, it definitely is on a multiple time frame as well. Not only are you breaking through a very clean resistance level on gold here today, when you look at the weekly chart, you had a little bit of a high base flag base pattern that kind of came into the 9 weekly. You're breaking through that as well, so you definitely see it as a multiple time frame. And you're absolutely right, Mark. For years and years and years in the asset class that the majority of people at tackle trading have a tremendous amount of confidence in, we have said any day in Y is a good day to start building a gold position. That does not mean every day in Y is a good day to start adding to a gold position. And that would be what I'm seeing on the chart here today. You're breaking out. This is a good breakout out of a clean resistance level. And so it certainly would be appropriate to look at this breakout on gold. Now, I will tell you, when it comes to, triggering in a breakout, you got 1 to 2 to 3 days to make decisions here in terms of a breakout. This would be day one. You close above that, that's that aggressive style when you're talking about trading a breakout. The less aggressive style is to let it close above the resistance channel, showing you that the entire market was confident in the gold position throughout the entire day, and then trigger above that day's high. Regardless of whether you're looking at the aggressive or the conservative, you got to like gold on a breakout.
Yeah, absolutely. This is a chart that we will be teaching off of new traders, like how to play
That is a
breakout.
textbook breakout.
Yeah, I mean, it's a textbook. We're going to be teaching off of it. My crude oil, I say my crude oil because it's about one of my largest positions now at this point.
It's definitely your crude oil. It
Yeah.
definitely is.
Nice bounce off a support zone, obviously. And Frank and I had a conversations about this in the lounge yesterday. Most traders, this is a 3-4 week from now type conversation. Tell everyone what you have with those lines drawn on the chart.
I have the lines drawn that I need to see to get confidence.
Exactly. And I love that because that's what traders do. It's like, all right, this is what I need. Like sometimes with gold, it's today. Sometimes with crude oil, it's a hypothetical situation that occurs 3 weeks from now.
That's just the simple reality. You got momentum and volatility to the downside. It's a tricky analysis on crude right here because you do have some really, really important support levels at 65. So 65 is kind of that number that you're really kind of tracking off. It's a double bottom number. And so you do like the 65 handle, and you do want to see development at 65, but you also got a bearish downtrend with momentum. Crude oil has been all over the board, one of the more volatile instruments, not only, of course, not only in the last, 2 weeks, but over the course of the last 6 months. You really don't. Saudi Arabia and OPEC doesn't really have your back right now. It's going to be interesting to see what occurs here. I do know the government is starting to buy oil at the lower price. I think that's a smart decision to start filling up those reserves at a lower price, and maybe that's going to play a little bit of a support build here. But at the end of the day, you're going to need to see more from a technical perspective. You got to, if you're a bull on oil, or if you're waiting for a bullish opportunity on oil, you got to wait for a reversal. Period. End of sentence, because you got a bearish downtrend right now.
Yeah, absolutely. Just pop into copper and silver real quick. Nice price movement on silver. Holy cow. I mean, this is a power candle to say the least.
I've said this for a week at Tackle in every trader's lounge. I love the 28 handle. I love the 28 handle and totally understand that it's an improving condition and we haven't broken out yet of those overhead resistance levels, but a very good developing candle here. And honestly, I still think you got a nasty candle at 30 on that failed breakout, fake out type scenario that did get a few of us at Tackle Trading, but I still like the 30 handle development here. And so you can put it on the radar, wait on some development at 30. It's choppy. I think you can wait on that development, but a really good candle coming out on silver here. Copper has a little bit more to do than silver at this point. And I think you can really simply just anchor technically against the 50 period moving average, which is converging against the 200-day moving average, which does have a fairly decent trend line that you're trying to break through as well. And so I do think copper's trailing silver. I do think it's trailing it from a technical perspective, but I also think it could have some compelling bottoming analysis coming fairly quickly as well.
Yeah, it's listen, we're going to continue to break down all of these charts in the Traders Lounge in our pro products. Listen, we have an amazing community. Come become part of it. Go to tackletrading.com, sign up for the free trial, see what it's all about.